What's good, YouTube? In today's video, we're gonna make another addition to the technical series, and what we're gonna focus on in today's video is fibs and how to narrow down your zones. Now, if you haven't subscribed yet to the channel, make sure you like, comment, and subscribe so that we keep on growing and I can keep on putting out more content. But in the meantime, let's get straight to it. Now, I have a technical series playlist that I've created that goes over elements of the Trading Wisely strategy in this channel. So if you haven't gone through it, make sure you go through it and familiarize yourself with the concepts for which we use in trading in this channel. So in today's video, we're going to be going over how to use fibs to narrow down, the best zones in order to trade. Now, as you know, we in this Trading Wisely, we kind of use the supply and demand concepts when drawing out our zones. But then what happens is typically you end up sometimes having lots of zones on your chart and you don't know which ones to use, which ones have the highest probability of working out. So there is a tip and a trick that we use using Fibonacci in order to locate zones which have higher probability than others, and by doing this you can basically focus on those particular zone and ignore the rest of the zones, so that you have the highest chance of actually getting a profitable trade. So in this concept, let's go to a new symbol. Let's say for instance AUD JPY, and yeah, let's check out the chart. So I'm going to start from I'm just going to do a quick top-down approach like we do in Trading Wisely, but like I said, if you're not familiar with the process, just go through the playlist and familiarize yourself with the concepts. So in the beginning, what we do is we like to go to the monthly to determine our bias, what the monthly is doing. As we can see clearly here, monthly is like in a bullish direction. It's it broke the latest swing high, this was the latest swing high over here, and it has broken it to the upside. As you can see, there's been a lot of bullish monthly candles, minor retracement, and then continuation. So basically on the monthly, our bias is bullish. So now we know where swing trades might what direction swing trades might occur. So now all we need to do is drop straight to our 4-hour time frame. Now obviously, as you can see, when looking at the 4-hour time frame, price recently has been ranging. Even though it's been ranging bearishly, it's been edging its way downwards, but still in pretty much a tight lip range. If we can say, let's say from here to here, or if you want to make it even tighter, you can say from here to here. Price has basically been trapped in this range. So of course, if you want to draw out your zones, there's going to be a lot of zones. Like for instance, here there was a break of a swing here, so you might draw out a zone here, and then when price returns to that zone, when eventually it did, you could get a short and the opportunity and continue here. And this movement down here itself created another zone which you could then highlight and then anticipate price coming back into the future. And then if price does come back into the future, you could definitely look for that to take a short, as you can see. And then also at the downside, there's also levels which you could draw. But what happens when you find yourself in a situation where there's just too many zones? Like maybe there's a zone here, there's a zone over here, maybe you find another zone over here, somewhere over here, and then maybe you have a zone over here, and then you just zones all over the place, and you don't know which ones are gonna work, which ones are gonna be the best ones to work from. So in this case, what you do is basically you can use your Fibonacci tool. So in order to use the Fibonacci tool, we draw it from the low to the high, or from the high to the low, depending on the direction. And you want to locate the most recent impulsive move. So if we look at zoom out of the chart, we can see there's a move that started from here all the way here. But you don't want to draw the entire move because it's not necessary, and if you use the entire data from the low to the high, you're going to be waiting a long time before maybe let's say for instance you draw from here to here. For price to get all the way down here somewhere for you to look for your zone, it's going to take some time. So what you want to do is you want to look at the latest impulsive move, and how would you do that? Basically, how I would do it is I would look at the latest move that did not break market structure. Now look, if we start from the low here, we can see that price made a high, then made a low, then made a higher high, then made a lower high, right? Actually, wait, it made a high, then it made a low, then it made a higher high, then it made a lower high, then it made a low, high, low, high. Then here we could say it made a lower high, and then but it failed to make a higher high, and then it made a lower low. So right here we could say structure was broken. And in fact, you can even say structure was broken here, depending on how anal you want to be about the levels. You could consider this a lower high, and then here it failed. Maybe here it managed to actually break. It made a higher high, cool. So now it then made a lower low, so it broke structure right here. And then you could say, okay, now we have broken structure. Now we're going to start moving downwards. So to me, this would be an impulsive move beginning to the end. That's it. That's where the impulsive move stopped, because there was a break of structure here. So now if I want to draw my next impulsive move, I'll try to find a low from here, and then we say, okay, now we start again. High, low, higher high, higher low, higher high, higher low, high, and then lower low. Now we have another move from A to B. Structure was broken here, so once structure is broken, we can consider that impulse done. So you could draw another fib from here to here. So that's how I like to do it, instead of drawing a huge move from here to here, because that's too much data to work with. We don't trade long term. We like to trade intraday, maybe same day in and out, or maybe hold the trade a couple of days. So in order to avoid using too much data, what you want to do is you want to locate the most recent impulse until the break of the impulse itself. So going with that concept in mind, I would start from here, because for me, I would say, okay, here there was a break of structure. Obviously there was a lower high here, and then there was a high, and then boom, there was a break of that low. So that changed the trend to the downside. So but from here we have a high, low, high, high, low, high, low, high, low, high, and then lower, low. So here there was a break of structure. So we could definitely highlight, let's say from here or here, whichever one you like. You don't have to be too specific, and then you could be like, okay, this right here is the latest impulsive move that I can highlight on the 4-hour chart. Then cool. Then in order to filter out the zones, what we like to do is, as price, price of any commodity in the world, right? Let's say prices of iPhone ranges from 1,000 to 2,000. So the lowest maybe the price an iPhone can be at, very, very cheap, is $1,000, and maybe the most expensive it can be at is $2,000, for example. Now if you buy the price of an iPhone at around 1,500, that's actually a pretty good deal. You didn't buy it at the most cheapest price, but you also didn't buy it at the most expensive price. But if you get a price lower than 50%, so maybe you get it at 1,400 or 1,300 or 1,250 or 1,100, the lower you can get to the base price, the better it is if you want to buy. And the opposite is for selling. If you want to sell, you want to sell in the top. Just like when we draw our zones, I always say you want to sell we always draw the 50%. So the best place to buy is at the lower portion, and then the best place to sell is at the high. Same way you would analyze the fib. So when you identify your impulse, what you want to do is you want to look at the 50%. So if you're, for instance, in this, it's a bullish impulse, right? So you'll be looking to buy, and our monthly is bullish, right? So the best place for you to look for a buy zone or to draw out a zone is in the lower 50% of that fib. And preferably you want it to be in between the 0.5% and the 0.786%. Of course, sometimes you'll get it low, but generally you don't want it to go that low, because if an impulse is strong and there's a lot of bullish momentum, it won't even get down to this level, because if it does go down all the way to that level, chances are that people who were originally trading and looking at it as a bullish move, if they see price going all the way down, they might start changing their mind and then removing their buy orders and then turning into sellers. So you don't want it to go too deep, even though the deeper it goes, the better price you have. So the ideal sweet spot is between the 50% and the 78.6. So if you get a zone within that area, that will be definitely ideal for you. So what I like to do is I actually have another fib that I've customized. So what it does is I draw it from the genesis all the way to terminus, and then it just removes all the other levels for me, the 38.6 or whatever, and I just have my 50 and 78.6. so it highlights a zone for me. So now within this zone, I like to look, is there any potential S&D zones for me to draw, and if I can find 1 or 2 zones within, I will highlight those zones, and then I will use those zones as high probability setups. So for instance, right here, I can see when price made this move, it came back down and then it made a nice impulsive move. So definitely there's a zone in here. And looking based on our technical series playlist, if you watch the video on how to draw zones properly, you would know that this definitely is a zone for us. And as you can see, what you would do is once price breaks this structure, so you know that structure has broken, so there's potential for price to go even lower, you would map out your fib, map out your zone, and then try to look for potential S&D zones in there, and then map them in advance. So when price does come back to those levels, you can definitely take those opportunities in the correct time of day and look for entry opportunities. So this was definitely one zone. And if we look down here, there's a zone here, but this zone is beyond the scope, so we would ignore it for now unless price continues to go down. Then maybe later on we would draw it, but right now the best zone for us to draw is here. We could also potentially draw a zone here in case the one above fails. So there we have it. We have 2 zones right there. Now you could even extend this a bit because there's a lot of wiki candles over there. So if price, for instance, fails this zone, it might tap this zone and then reverse. So these 2 zones are within the 50 and 78.6 retracement zones. So these are high probability zones for you, especially if the monthly bias is in your favor. So now all you need to do is drop down to your 15-minute time frame and then wait for the time of day. So as you can see, there was 2 times that the zone actually was tapped. The first time was around here, and let's try to put our sessions and see what time. This is Aussie JPY. So here at within the London session, it actually tapped this, but you know, based on our rules, we don't usually like to use the first tap, so we would like to wait for a deeper retracement. So that happened like a lot longer, like a few, maybe up to a week or 2 weeks later, we had a deeper retracement into the zone. And here we have during the London session, there was another tap, and then we had this nice pin bar candle that gave a nice signal. And if you missed this signal, you could have taken this signal right here, which was a nice bullish engulfing candle. So this could have been an entry reason for you to go long, and then knowing that either here or here, let's say you entered here, and then you could have put your stops wherever it is your trading plan tells you to put your stops, and you know, you just ride the trade up, you know. So that's exactly one tip that I want to add to the technical series for you if you have trouble, you know, trying to determine which zones are of the highest probability. But you have to identify a nice impulsive move. Some moves are not that nice, like some pairs the price will be, you know, moving in a tight range, and when you have prices moving in a range and you can't see a nice impulsive move, then you won't be able to use this this tip. But if you do have a nice impulsive move, this is definitely a way for you to filter out. So any zones that you have up here, you can still draw them out, but just know that they are of a lower probability of working out. But the deeper the price goes, between the 50% and the 78.6, if you find zones within that area, just know that those are the high probability levels where you can definitely have the most odds of the trade working out. Thank you very much, and stay tuned. Make sure you like, comment and subscribe, and just let you know, stay tuned for more updates. Peace.